Let's go ahead and take a look at the overall markets. We're going to start off with the triple Qs, which is the NASDAQ 100. My name is D. Anthony with evolutiontraders.com, bringing you guys technical analysis, no bias, no bullshit, no fluff. We're going to look at the daily chart to start off with. I'm going to get in quickly to the SPYs as well as a few of the technology stocks that I like to trade. So if we look at the daily time frame and we kind of go back in time just 2 days, we had this nice breakout over the linear regression, really over that 316 area all the way up to a price of around 320 to 321. You can see the last 2 days we have not yet to take out that high, which is okay. Bulls are still holding their 5-day moving average. Now if we kind of go forward and kind of see, potentially what could happen, what should we be looking at? As of right now, we're still going to have to give the bulls the benefit of the doubt as they are holding that short-term moving average. Now tomorrow, if we do have any sort of gap up or any sort of rip right off the open and we do not take out the highs of today and we start to back trace and we start to lose this 317.50 area, we've got room down below this 5-day moving average into a price of around 313. Now even if we do kind of come down and test 313, doesn't necessarily mean that the market is going lower or that the rally is over. All that is just a healthy back test. So depending on what type of trader you are, whether you are a short-term day trader, maybe you're a swing trader or an investor, you're going to kind of look at the charts a little bit differently. Myself as a day trader, I'm going to look at this on a day-to-day basis. So when I analyze these charts, I try to get my bias ready for tomorrow, and that's all I'm really doing. At the end of the day tomorrow, I'll go ahead and reassess the situation and kind of see exactly where we stand and potentially what charts look the best and what has the most measured potential. Meaning, if I do potentially take a trade, does it even have room for me to make any money in that trade? Or am I simply just putting on a trade for the sake of putting on a trade? A lot of newer traders will feel like just because the market is open and the price action in the price of the stock or index is changing, that you constantly need to be taking a trade. It's not the case, right? So again, this is very, very simple. If the triple Qs take out 321.50, 321.60, that's my indicator to go ahead and get long. I will take profits into 323 and 324, which is our upper supply zone here at this upper Bollinger Band. Now, if we look at today's lows as well as yesterday's lows, this price of around 317.25 would be a short position for me. Now, that doesn't mean put on the short position and let it ride and think that you're just going to make that we're going to come back down to the 20-day moving average or the 50-day moving average, or we're coming back down to 290. Maybe we do and maybe we don't. But what you have to kind of keep in mind is that if you do take a short position, go smaller size, take profits quicker. Until we start to lose the 20 or the 50-day moving average on the NASDAQ 100, we really have to treat all short positions as scalps. Right now, the bulls are in full control, especially in 2023, especially in the technology kind of sector, right? So again, that doesn't necessarily mean that we're not going to have red days or you can't play shorts to the downside, but just go a lot smaller on your position sizing. And if you get 50 cents, you get $1, take those profits off the table, because at the end of the day, it's all about grabbing those small wins, small wins, small wins. But essentially, you do want to kind of ride the trend. Now, as of right now, the trend is bullish until bears kind of prove to us that they can kind of take control of the chart. But as of right now, above all levels of supply here, all of our moving averages are stacked right on top of each other. If we kind of just look at what was going on today. So today we had a little bit of a downturn. We have gold rallying up. We had jobs numbers that were not as expected. If I look at what was going on here, okay, major indices are moving lower after job openings came in below estimates and factory orders decline by more than expected. So anytime we get these kind of numbers and these reports out, it can kind of really sway the markets. The market starts to think that we're going to go into a deeper recession. Now, maybe we do, but again, based on technical analysis and based on the price action right now, is not the time nor the place. Now, that doesn't mean that we don't have a rest week or a pause day, or maybe we have an intraday pull back into rising support. But to say that the market is going to make a new low just because we get one job print order out or one headline that kind of comes across the board is a far stretch. So again, just to recap, over this high of today, 321.75 is a long into 323, 324. You can see that we're starting to kind of flag going sideways. Again, right now is not the time where you want to be putting on a dozen trades each and every single day. You want to sit back and be a little bit more patient, allow the chart to develop and catch the next big move instead of trying to catch 100 micro tiny moves. Now, as price action starts to constrict and we start to consolidate, we want to make sure that we understand that ranges are going to be a lot smaller, especially today. For example, the first hour to 2 hours, the market was going up and then it was coming right back down. Then going down looks like it was going to be a short and then it would come right back up. That is when price action is not trending on the intraday basis and when price action is trying to figure itself out. Bulls are resting, the bears are trying to take control. However, the overall market is still strong. Again, if you do want to take a short scalp position, we're going to want to use yesterday's lows, which is the third, and that price is around 317.45. If we take a look at the SPYs have a little bit more work to do on their chart. But if we kind of look at where the SPYs are at, we are approaching the linear regression channel level here, 413.22. We're going to still need to get that daily candle close over 413.22. We're going to need to put in that new high, and then we're going to need to backtest either the linear regression at around 413 or this rising 5-day moving average at around 407 to kind of show and solidify that this move is legit. Now, again, they also did backtest their rising 5-day moving average. We don't really have a lot of room here to the long side. I would kind of wait for a close over 413, 414 before we try to put on more positions to the long side. Until we do that, just sit patient, wait on the sidelines for that to happen. If we do happen and manage to close underneath the 5-day moving average at around 407, we've got room down to around 401. So this could potentially be your next trade on the S&Ps if we do come to a little bit of a pause here. Now let's look at some of the stocks that I like to trade, starting off with Tesla. Tesla has been extremely weak. If we kind of look at what's going on with Tesla, we had this phenomenal day here on the 31st, all the way up into upper supply. I traded this long. It was a fantastic setup. 208 is the level that we came into in the pre-market after our session. Again, anything over 208.50 has room to 215. That would be our next kind of supply and our resistance level. We did have a 2-day pullback here, and you can see Tesla has tested its 50-day moving average. So again, price action, even though it has pulled back around 10 to 12 points, is not necessarily bearish. It's just either pausing or setting up for the next leg down. But if we do have any type of close below 186 on Tesla, we've got a lot of room down to around 170 to 172. This is the short position in the short trade that you're going to want to be in on Tesla. Again, right here, I'm not going to really want to put on too many shorts as we have this support. I'd rather wait for the daily candle to close below all of this demand, all of this support, and then take it on a short the next day if we confirm. As of right now, we can completely reverse this move. Anything over 198, 199 has room back up to 204. That's your trade on Tesla. Amazon was strong today. Amazon's got some room. We're currently closed at around $104. You can see Amazon on the daily time frame trying to break out of this 3-day consolidation today over 103.53. I actually put this in the Discord for the community to kind of keep on watch. This right now is just a hold long. If you would like to play it tomorrow, you're going to want to get this on a dip or over today's highs of around 104.14. But again, you will only have about $1 worth of room into our next resistance level, which is going to be the upper Bollinger Band and the linear regression channel 50. That's price is sitting at around 105.28. Any close over 105.28 has room to 107, which is the big daddy of them all, the 200-day moving average. If we kind of quickly look at one of the semiconductors that I like to trade, Nvidia also pulled back, but Nvidia has closed below its 5-day moving average here. We do have room to around 270.88. Again, if you are not a scalper and an experienced scalper, kind of let this go until either we close below the 10-day moving average or we test and then we bounce. Okay, right now is not a time where I'm going to want to be trading Nvidia to the long or to the short side. What I'm going to need to see again for almost about the third time now, Nvidia has been rejected at $280, over 280, over 280.50 is what I'd like to see into 289. That's the long play. Set an alert for 280 to 281. That's where we're going to want to get in long and play that into the next area of supply, which is 289. Again, if we want to look for a short position and the market wants to take a little bit of a pause, we're going to need to lose the 10-day moving average at around $270, and we're going to need to close below that, and then we're going to need to see the following day kind of confirm that with room down to what is this? 260, 258 is the 20-day moving average. Now, Snow had a fantastic day today. Someone in the Discord kind of alerted this, played it, and called it out. If we look at Snow's chart here, going back to the 31st, monster green candle kind of engulfing all of this price action, going back to this gap down here to the beginning of March. We closed right at upper supply, which is 150-day moving average. And today confirmed that and put in a nice spike all the way up to 158. Right now, let it pull back, let it consolidate. The next entry for Snow is going to be over 158, and you're going to have room into 160 to 161. So play that accordingly. If we do look at something like Apple, one of the big dogs in the technology sector, Apple kind of putting in this little bit of a floating candle here. I could see maybe 1 or 2 more days of back testing on Apple into 164. Any close below 164 would come down to around 162 to 161. Keep that in mind. This would be the bounce spot that I would like to play Apple around 160 to 162, looking to snag it off this area here. Again, any close below the 10-day moving average would take it down to 150, and then I will reevaluate the trade if it does get down to here. But I'm no long for me on Apple until we can either backtest the 5-day moving average or the 10-day moving average at around 160 to around 163. I'm going to need to see a successful test and hold, right? Last thing I want to do is get long here at the top to have potentially a multi-day or a multiple week kind of back test into these lower supports and have my capital just kind of tied up. I'm going to need to see the back test first, and then I'm going to need to see us hold and then either take out the highs of around 166 to 167 or try to snag it off the 164 or the 161. Again, don't want this video to get too drawn out here. Just wanted to give you guys a little bit of an update, stock market update. If you guys do like this type of technical analysis and you find that it would help you on a day-to-day basis, make sure to join evolutiontraders.com so you can get it live in real time, trade with other traders in the community, as well as get access to my 2 strategy courses. See you guys on the next video.